Hi. Welcome to the podcast. In today's episode, we'll walk through the decision flow to determine whether to accrue, disclose, or both accrue and disclose, or neither accrue or disclose for contingencies and subsequent events under US GAAP. And this is the most critical topic and often, causes confusion. By the end of the podcast, I hope you have a solid understanding of the process. So let's get started. Step one, identify the event type. The first thing you need to do is identify the event type. Like ask yourself that is it a loss contingency or is it a subsequent event? Loss contingency is possible future loss that results from the past event. For example, a lawsuit or a warranty claim. Subsequent event refers to the event that occurs after the balance sheet date, but before the financial statement are issued. For example, a settlement of lawsuit after the balance sheet date or a natural disaster that impacts the company inventory. So once you identify the event type, the next steps will follow. So look at the step 2. So let's dive into the step 2 loss contingencies under accounting standard 450. For loss contingency, we focus on the likelihood of loss and whether an estimate of loss is available. So here is how we break down. Now, if the loss is probable and we have an estimate, then we must accrue and disclose the contingency. For example, if the company is facing a lawsuit with a probable loss of 1 million, and we can reliably estimate the loss, we can accrue 1 million liability and disclose the details in the notes to the financial statements. If the loss is probable, but there is no reliable estimate, then we only need to disclose the contingencies as mentioned over here. Maybe you know the lawsuit is probable, but the amount of loss is uncertain. In this case, you disclose the lawsuit and its potential impact, but you do not need to accrue anything. The third one is if loss is reasonably possible. That is, it's more than remote, but less than probable. So in that case, you should disclose only. For example, a company might face a possible lawsuit, but the chance of loss is not yet probable. You disclose the nature of the possible lawsuit, but you do not need to accrue anything. And last, if the loss is remote, meaning it is unlikely, neither accrue or disclose. In that case, a company might face a lawsuit. So basically, like when company might face a lawsuit, but the chance of losing is like extremely low. That's why it is called as remote. So in that case, you don't have to worry for anything about like accrual or disclosure. So neither you accrue nor disclose. Step 3, which is for the subsequent events, accounting standard 855. Look at the subsequent events which are governed by this accounting standard. So for this, again, you have to ask 2 questions. Does the event relate to the condition that existed at the balance sheet date? Is the event material? So let's break down. First, recognize subsequent event. If the event relates to the condition that existed at the balance sheet date and its material, you accrue and disclose. For example, if the company settles a lawsuit after the year end for a matter that already a liability at the year end, like there wasn't already a liability at the year end, you adjust the financial statement to reflect the settlement and disclose it. Number 2, non-recognized subsequent event. If the event occurs after the balance sheet date and it relates to a new condition that was not in existence at balance sheet date, you disclose only if it's material. For example, a fire that destroys the inventory after the balance sheet date. You don't adjust the financial statement for the fire itself, but disclose if it is material. And what is material or not, it can vary from company to company depending on the situation. Non-recognized subsequent event, which is again immaterial. If the subsequent event isn't material, then in that case, you neither accrue nor you disclose it. Maybe something minor happens after the balance sheet date, like, for example, like hiring a new employee. Since it is immaterial, you don't have to worry about it. And step 4 is relating to some special situation or special cases. Like for gain contingencies, you do not need to accrue the gain contingencies until they're realized. And disclosure is optional if the gain is probable or reasonably possible. But the key is that you should not overstate gains or mislead users. For example, you might disclose a possible insurance claim, but you do not accrue it until the insurance companies actually pays out. Then another situation is related to materiality. If the amount or event is immaterial, generally, what I have said you earlier, we do not accrue nor disclose. Small events that do not affect the financial statement or user decisions, we do not need to be do not need to be recorded or disclosed if it is immaterial and does not impact the decisions of the financial statement users. So whatever we discussed here is the summary table to have more clarity on the concepts. So that's all for today. Hopefully, like you can review this table again, and I hope that this table and this steps, the decision flow will help you in working on your MCQ questions, and you have more clarity that what to accrue, what to disclose, when to do both, or when you select neither of the options. And understanding these steps is very important for the FAR exam, and it will help you to avoid any common mistakes when dealing with the topics. So if you found this helpful, do not forget to subscribe so for that you can get more tips on those FAR topics. Until next time, keep studying hard. Good luck on your exam.